First, with breaking news.
This is Business Week, coming to you from our studios here in Lagos. Coming up in a moment, the World Bank projects growth in African economies to rebound by 2.6% in 2023 to 3.4% in 2024 and 3.8% in 2025. Plus, the recent increase in electricity tariff has continued to generate concerns about its impact on essential public services and the economy. As Minister says, the tariff for Band A consumers will decrease if the Naira continues to strengthen against the dollar. Outside Nigeria, Turkey has restricted export of a wide range of products to Israel until a ceasefire is declared in Gaza. This is Turkey's first significant measures against Israel after 6 months of war. This and many more are what to expect on the show today. I am Frank Omalap, and this is Business Week. Thank you everyone for joining in. Let's begin with some of the biggest stories of the week. The World Bank in its latest report is projecting that growth in Africa will rebound from 2.6% in 2023 to 3.4% in 2024 and 3.8% in 2025. The new report is contained in the bank statement on its latest Africa Spurs report released on Tuesday. The report said increased private consumption and declining inflation were supporting an economic rebound in sub-Saharan Africa. It, however, said the recovery remained fragile due to uncertain global economic conditions, growing debt service obligations, frequent natural disasters, and escalating conflict and violence. The report highlighted that external resources to meet gross financing needs of African governments were shrinking and those available were costlier than they were before the pandemic. Elsewhere in the week, the Vice President, Senator Kashim Shettima, has reiterated the determination of President Bola Tinubu's administration to boost Nigeria's infrastructural needs and address the power deficit in Maiduguri, the Borno state capital. VP gave the assurance in Maiduguri when he hosted members of the Borno Elders Forum, All Progressives Congress, and other stakeholders to Ramadan Iftar. He emphasized the commitment of the federal government to boosting Nigeria's infrastructural needs. According to the VP, President Bola Tinubu has his eyes on the basic needs and requirements of the nation. He therefore called for continued support for the Tinubu's administration by all Nigerians at all levels, while stating that the government's policies will be immensely beneficial to all and sundry in no distant time. And also in the course of the week, the recent increase by the federal government through the Nigerian Electricity Regulatory Commission in the price of electricity for Band A customers to 225 Naira per kilowatt hour from 67 Naira per kilowatt hour has sparked concerns about its impact on essential public services in the economy. Some Lagosians who spoke with TVC Business News Desk say the hike in tariff is not justifiable amid current economic hardships faced by business owners and households. Sunday Binibo files in their report.
The electricity hike is one of the biggest points of discussion across the country at the moment. The hike targets Band A users who are mainly in urban areas and enjoy about 20 hours of supply daily, representing 15% of the 12 million consumers getting power from the national grid. According to a cross-section of Lagosians, the increase in electricity tariff is coming at a wrong time. They argue that it's unjustifiable compared to the level of supply across board.
The federal government just bring up certain things that they've not really sat down to think about, and this tariff increment is just something that is not sitting down well with the masses, you understand. The increment is affecting every area. The lights are not even stable. Some people cannot even tell what band they are on, and it is really, really affecting.
Even the light itself is even available. Not talk of you increasing the tariff. And even the cost of generator, the cost of fuel is nothing to write home about. Everything has actually gone wrong in Nigeria.
The supply have not till now justified the increments. So for me, I think it's about doing the right thing first. Put the cart first then the horse can come later.
Just like Susan, who runs fruits and drinks business, for Kunle, who runs a barbing salon, the hike is a bitter pill to swallow.
I'm not too happy with the increasement of the tariff. Likewise, I'm a barber, because when I load 5,000 naira, before I know, like 2 days now, the money is finished.
Some days we have to throw some things away. Some days we had to just, because we cannot, we cannot reduce the quality of service that we render. So it's a whole lot that it can be depressing sometimes. Now 20,000 naira is 87 units. What band? I saw on social media, someone was saying, what band am I? If you're buying 20,000 naira and the unit you're getting is 87 units, what are we selling? I'm going to calculate with what I have on ground now. See, we're talking about lights. That part. Keep the light.
Oh, thank you very much.
And they just bought the light 2 minutes ago.
Nigeria has for long battled with perennial electricity crises. Power supply has always been epileptic as unpaid government subsidy piles up to a record level.
In a bid to boost economic cooperation and drive intra-African trade within the continent, experts are calling for strategic collaboration and concerted effort to overcome barriers impeding trade activities among African nations. The expert made this call on the sideline of the Angola-Nigerian Business Council meeting held recently in Lagos. According to them, this call underscores the potential for significant economic growth and development through enhanced intra-African trade.
How does Africa trade with Africa? Simple. We look at Nigeria and Ghana for an example, and we say, okay, Ghana, what are you importing from the rest of the world that we, Nigeria, can supply you? So we take their figures, we take what they're doing, and we bring it back to us. And we wrap up production and productivity in those sectors. And then we export, we drive it into Ghana. We're not going by ship, we're just driving those products into Ghana. So that's the way to look at it for every country.
One of the major challenges is this coastal ship movement of goods from one country to another. And then this is one of the challenges we are trying to really face and then to try as much as possible to resolve. So both councils, DRC, Nigeria Business Council, and also Angola, Nigeria Business, we are really trying to look into this challenge and make sure that we form a formidable company that can really solve this problem. Another major challenge has to do with free movement of investors.
Also in the week, the Lagos Chamber of Commerce and Industry has called on the federal government to provide a special support mechanism to strategic companies and industries that play critical roles in achieving inclusive economic growth in the country. The Director General of the Chamber, Dr. Chinyere Almona, in a statement attributed recent improvement recorded in the nation's economy to the game-changing interventions of key players in the private sector like Dangote Refinery and Air Peace Airline. She noted that while the country strives to stabilize prices, boost foreign exchange inflows and attract foreign direct investment, it is imperative to recognize the roles that certain companies play in driving growth, fostering innovations, and creating employment opportunities. The Director General acknowledged the game-changing intervention from the commencement of international flights to the United Kingdom by Air Peace. And now Turkey has restricted the export of a wide range of products to Israel until a ceasefire is declared in Gaza. This is Turkey's first significant measure against Israel after 6 months of war. Israel has, however, responded, saying it will respond to measures which include curbing export of steel, fertilizer, and jet fuel, with its restrictions on products from Turkey. Turkey has denounced Israel for its campaign on Gaza, which was launched following the Palestinian militant group Hamas in October 7 rampage. Before now, Ankara has called for an immediate ceasefire, supported steps to try Israel for genocide, and sent thousands of tons of aid for Gazans. The trade restrictions, which come into force on Tuesday, follow Israel's rejection of a Turkish request to take part in an airdrop operation in Gaza. Well, those were some of the biggest stories in Business Week. And coming up in a moment after this break, our focus is on the recent gains recorded in the value of the Naira, factors contributing to Naira gain, and what needs to be done to sustain the current trend. And that's our talking point in a moment. Please stay with us. Thank you, everyone. You're still watching Business Week, coming to you from our studios here. Let's get into our conversation for today. The Nigerian economy has experienced a significant development in recent times, with the local currency, the Naira, gaining against the United States dollar. Well, this trend has been a subject of interest for both local and international economic analysts who have been trying to identify the factors that have contributed to this positive growth. Earlier on Friday, the Naira was trading at 1,242 Naira per dollar at the parallel market. Recall that the Central Bank of Nigeria has been at the forefront of implementing policies aimed at stabilizing the Naira. But what are the factors contributing to this current trend? Let's now get talking. I'm joined by the head of fixed income at Chapel Hill Denham, Mr. Oladipo Ajayi. He joins us virtually now. Thank you for your time, Mr. Oladipo.
Welcome.
We have seen the Naira strengthening against the dollar in recent time in the FX market, and many wonder why this trend. Well, in your opinion, what are the key factors that have contributed to the recent gain in value of the Naira? Let's start from there.
I think firstly, we need to look at it from the first instance, because I've said this severally before now, that the happening in the FX markets where we saw that aggressive depreciation of Naira is not fundamental. It's basically a function of sentiment around the currency at that particular point in time. And but at the point when the central bank actually swing into action, part of what I feel that actually led to where we are now is firstly trying to actually regulate all unregulated platform where FX is actually traded. And so what it simply means is that you can't actually determine the valuation of your currency by just an app where people actually make decisions, and that's actually a function of what determines how your currency is priced, and I think that is first on the table. And other things also that we need to also talk about is part of the policies that were shown by the central bank, policies like zero NOP for banks. And so what that simply means is that banks are not allowed to actually hold any FX open positions that is not tagged or that is not matched into any liability. So at that particular point in time, what the central bank is saying is that banks are not allowed to speculate on the currency, and I think it's something that should have come before now. Maybe the central bank has actually swing into action earlier than when they actually swing into action. I guess we would have been better off than where we are currently, and that's one of the reasons why we got that high before we saw that drop. And just last week also, the central bank also released another circular where they actually told banks that there's no more securitizing a Naira loan with dollars, and I think it's something that is not supposed to even be in the first place, because what you are trying to do is that you are trying to encourage people to actually buy dollar. When I buy dollar, I can take Naira loan and use my dollar as an hedge around the Naira loan. You continue to see pressure on Naira if we allow that to continue. Because what determines the valuation of a currency is basically the demand and supply on that particular currency. And when people continue to demand a currency, even when they don't need it, just for storage, it will continue to put pressure on Naira, and that's exactly what we saw at the last time. And also another thing also that we also need to mention is interest rates. We saw what happened in the February and the March MPC, where the monetary policy guys actually, firstly in the month of February, increased by 400 basis points. And I think that's about the highest that we have seen in the recent time. And not only that, they came back also in the month of March to further increase by another 200 basis points, meaning that between January and now we have done 600 basis points. And of course, we expect this to actually impact yield and return on fixed income instruments. And even to the extent that we saw treasury bills actually traded effective yield of over 27%. And at that particular point in time, it simply means that Naira asset looks very attractive. So some people that are already sitting on dollars, what they actually ended up doing is converting their dollar into more Naira and actually investing into Naira assets. And also at that particular point in time, we also saw influx of FX into the official market. If you look, let me give let me put it in perspective. Between January and March, we saw over $14 billion traded in the NAFEM window, compared to the $7.8 billion that we saw in Q4 last year. So it means that we've seen improved liquidity in the FX market, and that this on the back of attractive return on fixed income instrument, on government instrument, and some of these things are some of the things that actually create the current respite that we currently have in the market.
Let's talk about the sustainability of these. I know you mentioned the improved liquidity thanks to CBN's intervention in the forex market, but the concern by some experts is a question of sustainability. How sustainable is the current trend considering the ongoing economic hardship or challenges both locally and globally? Maybe can you say how long the CBN will sustain these without other supportive measures?
Of course, there's no way that central bank only can do the job. And basically, what we need to do is to create an enabling environment where we can actually attract both FPIs and FDIs into our markets. And also, if we are not growing your FX revenue, you have to find a way to reduce your FX outflows. And I think that's the positivity that I think will actually pay out more like in Q2. We've just some days ago, we saw what happened in the diesel market where Dangote started selling diesel to marketers. And the information in the market is that effective the month of May, we'll start seeing PMS also in the market. And so what that also means is that there will not be reasons for the government to actually import aviation for diesel, PMS, and the likes into the country anymore. So it means that we'll be able to save all those dollar outflows that one way or the other have actually been hemorrhaging our reserve. And if you remember vividly, sometime last year, there was an allegation against NNPC where NNPC was actually alleged not to have repatriated any fund into the Federation account. And their response was that there's no fund to actually remit into the Federation account because they were actually analyzing that whatever it comes to them from the joint venture agreement, they ended up using it to actually import refined products into the market. And also we understand what that means at that particular point in time. So for now, what it means that we don't need to go that route anymore. It simply means that we have local producers that are producing these products. It also simply means that what we just need to do is actually sell the crude oil and get our shares from the joint ventures. And this would now actually be credited to central banks.
Let's also look at the prices of commodities and foodstuff. Even though the exchange rate is trending low and Naira is gaining, food prices are very, very high at the moment. And when you look at prices of commodities in Nigeria rising, of course, it really dropped from history. But do you see the gains in the value of the Naira impacting the prices of things in the market going forward?
Well, I think aside the central bank duties and all the things, we also expect the governors, the fiscal policy guy to also swing into action around this thing. Sometimes, like about 2 weeks ago, the governor of Lagos State actually mentioned that all supermarkets has to have a price tag on the product they are selling. And what they are trying to do is that simply means that there's every tendency that they may start sending monetary team outside to actually check the fair value of what you are saying so that you won't continue to actually export Nigerians. I think this thing that's currently happening is just a matter of time. That I give it another 2 months, we'll see more like full reflection of where we're supposed to be. Sometimes some people actually still the products they have on their shelves currently, they bought them at 1.7 conversion rate, some at 1.8 conversion rate, and they are still trying to actually push that out into the market off their shelf. And so it simply means that whatever new inventory that you are supposed to be having now will be valued at the current levels. And all what we need in the market is just for one person to start selling at the fair price. And I think there are a lot of big names currently out there where you can actually buy things at the right pricing as we speak. So it's just a matter of time. It's not something that we expect immediate reaction to that. Just like what you said, it's normal slogan in Nigeria that whatever goes up does not come down. But I think that with the current levels now, it's a matter of time that we'll see more like the real price based on the current happening in the markets.
Let's talk about a take-home point for businesses, because this is more like a pizza, I mean, with different sizes inside, isn't it? So how can businesses and individuals leverage the current trend and the value of the Naira for growth? Is there something or businesses or individual can take out of this current trend?
Well, I think the first thing is the fact that a lot of people need to learn from this, because the first thing is the fact that we need to have full understanding of the happening in the economy so as to be able to take appropriate and decisive decisions that would not actually mar our businesses. A lot of businesses that were aggressive at 1,900 to Naira, despite the fact that we all know at that particular point in time the currency is heavily underpriced. Of course, they've learned a lesson that you need to have an advice, you need to actually make inquiry, you need to listen to insightful programs where they can actually dissect the economy and give you an idea of where we are and where we're going. And but the good part of it for me is that if you remember last year, and a lot of these manufacturing companies were booking heavy losses as a result of exchange loss. We saw that affect most manufacturing companies aggressively. We saw the likes of Dan Sugar.
All right, let's look at the role of the monetary policy as I allow you, before I allow you to go. So let's look at the role of the fiscal policy.
Capital, the state commandant of the NSCDC, Matthew Ovie, said his men also uncovered an illegal oil bunkering site in Owaji-Egbema local government area of the state. According to the commandant, NSCDC in Imo State is not relenting in its effort to bring to justice economic saboteurs.
We went to Agbaja